All right, everyone. Good morning and happy Wednesday. Earnings from a couple of big dogs last night, AMD and Google, both of which are taking pretty good thumping here this morning. AMD gapping down to about 107, so a good $12 pullback. And then for Google here, give me 1 second here, guys. I got to echo. All right, there we go. Now we are good to go. My bad. But yeah, gap down in AMD. Google here gapping down to about 190. So a healthy $15, $16 gap down. But for the most part, what has Google done the last couple of months? Pop it into 200, flush it down to 190, pop it into 200, back to 190. On the gap down, they take it right back to that 190-ish. So a couple gaps down there. But initially, market holding up pretty good. S&P futures are down a third, chopping around their daily 21, daily 50. QQQ futures down about 0.7, but same kind of price action. 21 EMA, 50 SMA. I think the most important thing to recognize right now is that we're stuck in chop. And chop can be really tough to swing trade. Behind all the chop right now, we have a lot of squeezes. S&P futures, QQQ futures rather. We have a weekly, a 3-day, a 2-day, a daily, a 2-hour, and a 5-minute. A lot of energy getting built up. S&P futures have a 5-minute squeeze, a 2-hour, a 2-day, a 3-day in the weekly. The cash market, cash QQQ, cash S&Ps, a weekly, a 3-day, a daily, 2-day, 2-hour, 15-minute, 5-minute. And then cash S&Ps, a weekly, 3-day, 2-day, 4-hour, 2-hour, 15-minute, 5-minute squeeze. So yeah, in the short term, is it chop? It's definitely chop. But I think bigger picture chop that can eventually make for a really big move. And, if anything, anchor to the weekly squeeze, which could take a while to fire, but getting a sense of how good could the move be, how good and how big. They break the squeeze short, that could be the S&Ps down to 5,500, 5,450. They break it long, that could be the S&Ps into 6,360, 6,350, 6,400. Tough part for now is trying to call for that timing and direction. When do they break the squeeze out, and are they taking it higher or are they taking it lower? One thing making it tough to call for that right now is just the neutral nature of the market. If we check for buy signals and sell signals up here, nobody's really home. So we have one part of the equation. We're building up a crap load of energy. We don't have a weekly buy signal. We don't have a 4-hour, a 2-hour, a 1-hour, 30-minute, 15-minute, or a 5-minute. So yeah, we're building up a lot of energy that can make for a big move. But in the short term, no real signs of, hey, it's probably going to be a move lower or a move higher. I think a good rule of thumb, doesn't mean you're going out there buying everything today. If the bulls can at least keep price above the 21 EMA, over on the weekly chart, if they can at least keep it above the weekly 21, doesn't mean we break out at all, doesn't mean we break out anytime soon, but I think you want to continue to give them the benefit of the doubt. S&Ps haven't closed below the weekly 21 since October of 23. And QQQ for now holds up pretty good above that level. So above that 21 in a squeeze, I do want to continue to lean bullish, meaning I'm not looking for a big short here. But my preference is, all right, I'm getting bullish, I'm putting more cash to work when I can take my weekly 3-day daily squeeze and actually throw some buy signals into the mix. Bulls can't do anything with a weekly 2-day daily squeeze if they can't even get a 30-minute or an hourly buy signal. So till that picture changes, just points towards more chop. We got more economic data coming up. We have more earnings coming up. All kinds of things that could shake the tree. But yeah, guys, two biggest pieces of advice. One, be careful getting bearish above the weekly 21 EMA. Take the S&Ps for example. Has not been a good idea to get short that level for going on a year and a half. They pull it back this week. They close below the weekly 21. Then it's a different conversation. But for now, be patient. Maybe cut your size in half. Give your trades plenty of time. And I do think give it enough time. There will be a light at the end of the tunnel. I don't love the chop at all. Not enjoyable, not fun to trade. What you get at the other end of the squeeze is enjoyable and is really fun to trade. Don't know when, don't know exactly which way, but when they finally fire the weekly squeeze for the QQQ, right? If that's bearish, that can be QQQ down to 460, 450. If it's bullish, that can be QQQ into 560. So my question would be, what's easier to trade? We're popping, we're flushing, a lot of back and forth noise, a lot of choppy action, or a $50, $60, $70 flush, or a $30, $40, $50 rally. I think whether you're a swing trader, a day trader, a scalper, you like to trade the weekly time frames, you like to trade the 15-minute time frames. For all of us, this is not the easiest market to trade. When they break the squeeze, it all gets a lot easier. So make sure while we're going through that compression phase, building up the weekly chart, building up all the squeezes, you don't want to lose your shirt. If you're trying to trade every move here, easy enough to lose your shirt. Daily chart for the QQQ. Imagine you're sitting here trying to get super aggressive on every little directional move. Unless you're really good, they're going to tear you apart. They flush it, you're getting short, they pop it. Now you got to cover your short, you're getting long, they flush it again. So you sell your calls, you buy your puts, and they do that a good 1, 2, 3, 4, 5, 10 times. We're going a million different directions, but bigger picture, we're not really going anywhere. Day trade, swing trade, tough market. They break it out, break it down, begin to fire the squeezes, much easier market. So take your shots, look for your opportunities. Try to save the bulk of your cash for that bigger move. And again, tough to call for timing and direction when everything's so neutral here in the short term. Below the weekly 21 with a daily 4-hour hourly sell signal, I think it might be time to get short. Above the weekly 21 with a 4-hour, 2-hour, 1-hour buy signal, it might be time to get long. Neutral, tough to work with. So patience will pay. And then a couple of things that we're working over in my room right now. One of them being TSM. Interestingly enough, they spank AMD. They say, all right, AMD, to hell with you. We're going to gap you down pretty big. And then TSM's catching a tiny pop. You got the SMH catching a tiny pop. Broadcom catching a nice move. Broadcom gapping back into 230. And then the Michael Jordan of the semiconductors, although a bit more of a Dennis Rodman as of late. Even Nvidia catching a little pop back into 120-ish. So a little interesting in getting a gap down there. The group doesn't seem to care too much about AMD. So for TSM right now, and to be fair, if you look at the spreadsheet, I'm long a semiconductor, and the SMH grades out as the it's so bad I got to hear twice apparently. I got to figure out what I did there. But yeah, looking at the rankings right now for the sectors, let me blow it up for you. All right, who's bullish? Gold with a 120 out of 120. Communications is getting a 116. Silver, ARC, XLY, financials, materials. Bottom of the barrel, SMH with a negative 35. So the goal should always be you're taking the best setups in the strongest names in the best markets in the strongest sector. Those stars of aligned moments in time usually come from, all right, you've got a really good looking setup in a really good looking market in a really good looking sector. So imagine if the QQQ and the SMH looked like TSM on the weekly chart. That'd be the moment in time. Index, sector, stock, all shaping up for a big move. Um, this time around, TSM is a bit more of a, I don't know if we would call it a one-star general compared to the QQQ weekly. QQQ weekly not bad, but not the perfect 15. It gets a respectable 13, but not the 15. And then the SMH here is just trapped in a ginormous weekly squeeze. Really a lot more neutral than a TSM. Now, that's not unique to TSM right now. I think it's more a function of the market. But point being, SMH has a lot of work to do. Therefore, if you are trading TSM, you got to acknowledge that. Might be a good-looking weekly chart, might be a good-looking setup. In TSM all by itself, might grade out really well. At the moment, not in the strongest group. Quite the opposite. It's in the weakest group. So what does that mean to me? Do I have to completely avoid TSM? Well, not really. Just means I can't trade TSM in the same fashion I would if the QQQ, S&Ps, Nvidia, SMH all looked just as good. And we all got different risk appetites, of course. But me personally, that kind of moment in time, TSM, QQQ, SPX, SMH, they've all got that perfect weekly squeeze. I'm trying to get, 10, 12, maybe 15% of my account into TSM. Like really up the ante, really get aggressive. Everything's coming together. Does TSM look really good? Yeah, it does. Until the other things can line up, I'm looking for maybe 2, 3, maybe 5%. I'm going to cut my typical risk in half, even though I think it's a really good setup. And then maybe a couple weeks down the road, QQQ is breaking out, SMH is better, Nvidia is better. Well, then maybe I do come in and buy more TSM. But putting all that aside, I do like the weekly squeeze, perfect score of 15. I think the idea of a push higher is a little bit invalid on a break back below 195. They do break it out, fire the squeeze. I think good for a move into 240, 245. My preference is buy it and be wrong down here, then buy it and be wrong up here on the breakout. I come jumping in buying TSM at 230. Then I'm maybe taking a $30 pullback on the chin back down to my buy zone. If I can buy TSM around 204, 205, 210, 205, yeah, I'll take on about 5, 10, 15 bucks of risk in exchange for $30, $40 of potential upside. So I like it, but got to trade these things in the right fashion until a few more pieces come together. And of course, a big piece for TSM will be Nvidia. So we'll jump over here next. And the thing is, I don't think that TSM, Broadcom, I don't think the good-looking names in the semis, I don't think they need Nvidia back to a brand new all-time high. Wouldn't hurt, of course. I'm thinking a little more if Nvidia could just stabilize. All right, get back above a key level, hold above it, take a chill pill, put on a couple of band-aids, and then just trade the thing sideways. That might be enough for TSM to go on and break out. If they can just stop Nvidia from rolling over $5, $10 every day, that might do the trick. So what I would look for into the end of the week, and to be clear, not as an idea to buy Nvidia. Before I can buy Nvidia, I got to buy more TSM. It's a superior setup. But what I would look for end of week would be a good close back above 123, 125 for Nvidia. Get it back above that 200 SMA. Keep it above that 200 SMA. It won't fix all the issues for Nvidia, but they could potentially just try to stabilize it. Put a band-aid on it, take it sideways, then then the SMH might get a little breathing room. Below 125-ish continues to be a pretty sketchy name here. So all eyes on Nvidia, and then Broadcom catching a decent pop this morning. My preference for now would be TSM over Broadcom, mainly because of that big 3-day weekly squeeze. But being realistic, if one of them works, decent chance they all work. But all right, that is that on TSM, Nvidia, and the SMH. Another trade of ours in the room right now is Docusign with a 2-day squeeze, a daily, a 2-hour, a 30-minute, a 15-minute, and a 5-minute. One more thing to consider in this market at the moment, along with maybe cutting your size in half, don't be afraid to take the quick paycheck. Till the S&P's QQQ can finally break out of that big range, calling for a big breakout, calling for continuation, might be a little tough. So a good example is Roku, which we traded in the room last week. We took 2 trades here, pulled out 2 profits. On a setup that in a good market, I think you take and call for a move into 91.50, 92. Really solid daily squeeze, really solid 2-day squeeze, 3-day squeeze, structure, momentum, all of the bells and whistles. And they push it, right back into the range. That kind of action should be pretty typical until the market can finally break out. So on Docu here, in a better, more directional market, I probably take that daily squeeze, get long, try to call for a move into 104, 105. Good trend, good structure. If they can get that momentum turn, this will be a really nice daily squeeze. In the current market, neutral, choppy, volatile, range bound, I'm buying it back here, and I'm looking to cash out on a pop into $100. Not a big breakout, not a big explosive directional move. Not calling for the full potential of that multi squeeze. But until we get a better market, trying to do that could be tough. Roku being a good example, and a few more out there. So we are long Docu. We got the 100 calls for February monthly expiration. And yeah, not looking for a home run here. A little pop into 100. We'll take our paycheck. They pull it back, break it back under the 21. We'll probably cut that loose and move on to a greener pasture. Couple more names for you guys. One that I like a lot here is Crowd. And I'm not long any Crowd right now. Much to my own dismay. Okay, so check this out. We have a 3-day squeeze for Crowd. And we also have a 3-day squeeze for Nvidia, SMH, QQQ, S&Ps, all the above. Ignoring that 3-day squeeze itself, here's the difference. Unlike the QQQ, S&Ps, Nvidia, etc., Crowd has a lot of buy signals. Weekly buy signal, daily, 4-hour, 30-minute, 15-minute, 5-minute. Meaning from the ground up, you have more alignment for a push out of that 3-day squeeze. Right? So think of that like a ticking time bomb. And now here's your matches. 5-minute chart can light the fuse, 15-minute can light the fuse, 30-minute, 1-hour, 4-hour. The more time frames printing buy signals to light the fuse, the quicker you can get the big breakout. Well, if that makes sense, then how come the QQQ can't break out yet? We don't have any matches. So we're just kind of sitting here for now, looking at that 3-day squeeze, hoping that bomb goes off. Not a weekly buy signal, not a daily, not a 5-minute, not even a 1-minute. So I like that about Crowd. You have that bigger time frame compression, but you're also not lacking any oomph. You got some oomph here. All right, 3-day squeeze has a target around 430, 435. 2-day squeeze calls for a push into, we'll call it 430. And then a little 2-hour squeeze action here into the open. I like it above 390. If you're bullish on Crowd right now, what you don't want to see ideally, break it out above 390, get the push going, and then Couple days, about a week later, you pull back, you're right back into that range. Doesn't mean that they go on the kill crowd, but in the short term, trying to call for 420, 430-ish, it's ideal they don't take it back in that box. So I like it for a long here above 390. Show is a pretty one. And then final one for the morning, and this one will I imagine will require a lot of patience. But I am going to keep on watching Google. I liked it for a long before earnings. And now my question is, do I like it about $15 cheaper? Nothing I could buy at the open. But what I'll watch here next couple of weeks is this 2-day squeeze. Into earnings, perfect 15, trend, structure, momentum, all the pretty colors. On a gap down to 190, you maybe pump the brakes for a little bit. On the idea of jumping in buying Google. My goal would be, whether it's later in the week, whether it's next week, next couple of weeks, at any point here, if Google can rebound and then offer me a good entry in that bullish 2-day squeeze, I want to jump in. I want to be a buyer of the 200 call and then look for a breakout. But that'd look like Google back above 193-ish, bunch of lower time frame buy signals, none of which I think they'll get today, maybe not tomorrow. Maybe not at all. But we'll keep an eye on that, and then checking out the futures here. Again, guys, really important to recognize what we're in right now. Noisy, volatile, range-bound chop. And then think of it like this: you have to be really, really, really freaking good to operate in that kind of chop and pull out big, consistent profits. I don't think you have to be very good at all to pull out big profits out of that kind of market. Breakout, we're pushing, clear direction, nice and easy. Take your shots, do your thing, look for your trades, but again, recognize where we are. More importantly, recognize where it could take us. It might be another 1, 2, 3, 4, 5 weeks of pop it, flush it, pop it, flush it, all that nasty. Eventually, squeezes will fire. What I hope for all of us is that we're not getting torn to shreds right now. Short, long, and then the day comes, squeeze breaks short, squeeze breaks long, big directional move, and we're not fully taking advantage of that. Patience shall pay. But all right, guys and gals, any questions for me, any chart requests, I've got you covered. Drop them down here in the chat, and I'll get caught up with you. Nvidia 121-ish. Shall not be a dull one. Yeshua, good morning. Gold looking strong. February 10th, 263 strike. Can we analyze a possible exit point this week or next? Yeah, gold, I would agree. Gold looks really good. As a matter of fact, if you look at the top rankings from last night, gold fell. Where are you, gold? Yeah, gold tied for number one with Amazon, Google, and Walmart. RIP to Google with a perfect 120 out of 120. All right, let's take a peek here, shall we? So here would be my thought process. Like my entire strategy, my entire approach to trading is just trying to catch the move that they've already made for the most part. I want to find the bullish name. I want to find it in an uptrend. I want to buy it in a squeeze in my 21 EMA. And then when the squeeze fires, I want to take that move towards that green line. All right, so we got our 21 EMA, And then the green line, that measures 3 average true range moves above that 21. The red line measures 3 average true range moves below that 21. Probabilities wise, that does tend to be the easy, more explosive part of the push. Can they go higher? Of course they can go higher. But in terms of, all right, where do I want to make my focus? What move can I catch time and time again? What move can I get better at? What move can I get bigger at? From what I was taught by JC and Henry, it's that move from that 21 into that 2.5 to 3 ATR neighborhood. And the goal should be that by the time we're pushing towards that target, we're already sitting on a nice profit. And that's the power of a good entry inside the squeeze. You're buying the thing back here. You've caught a nice move. Now think of the flexibility you have. You're buying it back here. You've caught the easy part of the push towards the target. For conversation's sake, let's just say you make $1,000 on that push. All right, so your calls are up $1,000 on the quote unquote easy part of the move. But you're thinking gold looking good for more, right? Still room for higher. All right, take your $1,000 of profit. Book the paycheck on the first part of the push, and now maybe turn around and take $200 of it. Go buy $200 of cheaper, further out the money calls. Now you're in a really good spot. Gold collapses, net, you're going to make $800. And that's the key. You want to make sure all said and done, whether you've taken 1, 2, 3, 4, 5, 10 trades, you want to make sure you have a net profit if you caught the easy part of that push. Going back in the day, I would do the opposite. I'm buying it back here. I'm catching the breakout. And then I'm thinking, well, hey, this is enjoyable. Let me buy more. Keep on buying more. Keep on pounding the table. And then on the big flush back to the 21, all that profit disappears. Now, I haven't caught in gold here, but if I did, that'd be very much my thinking this morning. They're going to gap it up about $1 from that weekly target. If I've caught a good chunk of that push, I'm going to cash out and then maybe roll out a little profit into a cheaper, quote-unquote, free trade. Not a free trade, but you financed it. You're taking out a tiny loan from your previous profit. Bigger picture, though, I would like to maybe buy the gold futures on a pullback. Have they taken it to the target pretty quickly? Yeah, for sure. At the same time, though, has the squeeze just fired? Yeah, it just fired this week. Maybe not in a straight line, but bigger picture could shape it up for more upside. So yeah, gold looking great. Hey, good morning, Alan. Always good to see you. UAL. That's the airlines, right? Earnings are behind them. That's a lovely thing. All right, let's break her down, shall we? So I have to like the 3-day squeeze. Brand new squeeze, score of 15, all of the pretty colors. And then you got a 2-day squeeze inside of it. Not quite a 15, but a 13. A respectable 13. All right, 4-hour. So right now for UAL, a lot of energy being built up. And an important observation, not on our lower time frames. If we have a 15-minute, 5-minute, 3-minute squeeze at the open, it doesn't take too much to fire them. So think a small piece of dynamite. When we have 3-day, daily, 4-hour squeezes, takes a little bit more. So what I would do for UAL, I would anchor to the 4-hour squeeze. And for the entry, I'd wait for a 4-hour buy signal. And to get that at the moment, that'd be a momentum thing. 4-hour chart has a big squeeze, good trend, good structure. Tough to get a push going until they can take that MACD line, pull that back above 0. When and if they do that, they'll get the buy signal. When and if they do that, the 4-hour squeeze should be in good shape for a push. If they can push the 4-hour, then you call for that domino effect. 4-hour squeeze far as long takes you into 115-ish. But if they fire the 4-hour squeeze, they might go fire the daily. Well, if they fire that one, that can get you into about 118. But hey, if they fire the daily squeeze, they might get around to firing the 3-day, and that can take you into, by that time, a bit closer to 120. So I like it, but yeah, you got to get a little oomph going here. And I think with patience, a 4-hour squeeze could give you that oomph. Hey, good morning, JK. How are you? EA in the communications. EA and XLC paced at a huge difference at earnings 24th. Yeah, so don't quote me on this. Well, no, EA Sports, they don't make. God, I'm getting old. What's it called? Grand Theft Auto. They don't make Grand Theft Auto, do they? I've been hearing rumblings and rumors about that. But putting that aside, let's check it out here. Earnings. All right, earnings came out last night. Looking like a little gap into 124, 125. I think overall, just not a good looking chart. Negative 13, bear trend, bear structure, bear momentum. And a pop into 124, 125 won't change any of that. Frankly, a pop into 130 wouldn't change too much either. So let's flip this one upside down. And a little trick for you, if you put a minus sign in front of a ticker, so minus EA, that'll show you the inverse chart. At the inverse chart, of course, a lot more bullish. It would remain bullish really until they break that 21 EMA. So the real deal EA Sports, I think off that daily chart would remain bearish, at least until the move back above 130. So on the bullish idea, I want to buy a pullback to that 21. On the bearish idea, I want to short a rally into that 21. All right, buy pullbacks into a rising 21 EMA and short rallies into a falling 21. This falls under the second category here. Hey, good morning, Debbie. Always nice to see you. All right, folks on YouTube, how are we here? Good morning, good morning. Hey, good morning, Art. Always good to see you. Terry, you've got to be a happy Lakers fan, I would imagine. Luka Laker. Who would have thought that one, huh? Hey, good morning, Mark. And good morning, Donald, excuse me. Donald looking at RKLB. Three-day squeeze, 2-day, 4-hour, 2-hour, hourly, and a 30. So basics of the squeeze. What can we take from that? Without thinking about long, thinking about short, or thinking about when. Energy is being built up for a move down the road. So RKLB here, fixing the bust and move eventually. We got to figure out the timing of the move and which direction. So 3-day squeeze. That's pretty solid right there. Big push off the 21. Chop, 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 chop. Brand new squeeze. Good structure. Perfect 15. All right, so the 3-day squeeze would be an A+ setup. And until that 3-day squeeze loses that white arrow, I look at that and think it's a piece of dynamite. Potential for a big breakout, potential for the explosion. But it's not going to do that by itself. Something has to light the fuse. Looking at it into the open, no daily buy signal, no 4-hour, no 2-hour. Only two time frames of the buy signal are the weekly and that 3-day squeeze. Imagine instead now you take that 3-day squeeze, and from the daily down to the 5-minute, nothing but good structure, momentum, trend, bunch of buy signals. Never guarantees, hey, they're about to break out the 3-day squeeze, but you're locked and loaded. You got every time frame pointing for a move in one direction. Those kinds of things you want to put our cash into. All right, so let me go check out the 2-day squeeze. All right, 2-day squeeze needs a momentum kick. 4-hour squeeze will need a momentum kick, meaning get the MACD line back above 0. Trend is good, structure is good. Go check our 2-hour squeeze. Lacking momentum, go check the hourly. Also lacking momentum. So to keep it really simple, I would watch the 3-day squeeze. I'd want to be a buyer of the 3-day squeeze. But to jump in and do that, I would need a good buy trigger. And the trigger for me can't just be, hey, there's a good-looking 3-day squeeze. I'd want to wait until I got a 30-minute buy signal in hourly. The bigger the time frame, the better, and the more the merrier. But I think you're looking in the kind of spot you want to look. We don't know for sure, we're not too sure when, but at the moment, that combination of trend, structure, momentum, and a squeeze points towards a move into 35, 36. All right, cool. We got the 3-day squeeze communicating one thing. Now, can all the other time frames here confirm that thinking? Right now, they're giving us no confirmation. They're not saying that the 3-day squeeze is wrong. They're not saying it's right. Just a lot of neutral. But I like it. I might actually keep an eye on that. Let me write that down real quick. RKLB. Yeah, nice call out. All right, let me check the clock here, guys. Got a couple more minutes with you. BW, AMD, you're in calls. Best to sell at the open. Yeah, my major question would be how much left do you have to salvage? Depending on your strike selection, time till expiration. If you've got a 1:30 call for this Friday, for example, there's probably not too much left on that contract at the open. So not too much to save by cutting it. If you have calls that expire couple weeks, couple months down the road, and then maybe at the open you're down 25, 30, 40, 50%, yeah, I get my cash out of there and move on to a new idea. I wouldn't hold on to it based on thinking, hey, I think AMD will rebound. No, it's wasn't a great looking chart going into earnings, and the $10 thumping here at the open won't make it any better. I'm in a pretty similar spot right now with my SMH calls. I had the honor and the privilege of buying them up here. Nice push. Here comes a breakout. I'm up 30, 40, 50%. And then, pow, the gap down of gap downs. Monday morning a couple of weeks ago, at the open, those calls were down 70, 75, 80%. All right, I can cut them, get the little bit of cash left out of the trade. Or I can accept the fact that they hit me on the chin. I woke up, calls were basically dead on arrival. Not too much to salvage here. But that's a lot different than playing the hope and pray game. You don't want to think, all right, well, I'm going to hold on to him here because maybe, just maybe, they'll rebound and take out the high. My thought is, well, they're basically dead. I've got all the way until April. Risk reward wise, it does make more sense. Hold on to the trade. I'll maybe lose the final 15, 20%, or lo and behold, they pop it, break it out, and all said and done, big fat profit, and we're all happy. So good question there. All right, guys. Good morning, Robert. Salesforce, CRM. All right, got a 3-day squeeze shaping up. Little bit like back here. To be fair, you have better trend and structure this time around. But notice back here, you don't get anything going out of that daily squeeze until that momentum line finally crosses back above zero. Now you've got some gas in the tank. Now you've got some wind at your back. Now they can go make that push. If they can do it again, I would call for a similar move. Maybe a better move being that you have better trend and structure. But that'll be the key on that one. Take the MACD on the 3-day, pull it back above zero, trigger the 3-day buy signal, and then looking for more confirmation. 15-minute, 30-minute, hourly, all the above. But I like it. I like it. All right, y'all. I got to cut you loose here. Got to go take the folks in my room through the open. So as always, thank you for your time and effort. I appreciate y'all hanging out. Have a good Wednesday. Be patient. And yeah, back here on Monday morning. See how things have all shaken out. Adios.